Welcome to another global macro update here. Like always, we're going to go over some news updates, just some relevant topics regarding the world of finance and economics, as well as going over some updates with the COVID-19 virus here that's kind of going around the globe, and then going to go over some charts like always. So first off, let's look at kind of the spread here, what's happening, just some general numbers. I think if we refresh this might be a different number. Let's look. Because I haven't reached, 330 basically. Wow. So one thing to note that's a positive, other than the increase in numbers substantially, that's not really a positive at all. That's a very big negative. We can see that mainland China has basically curbed the growth of and the spread of the virus, and we'll talk about that within one of our news topics that we'll go over after this. One thing that's really unfortunate to see is this exponential growth in the other locations. We're not really getting a slowdown. It's growing, it seems like, at like 30, 20, 40-ish% per day. And if that doesn't scare the shit out of you, I don't know what does, because just use a simple compound calculator and you'll understand that compound interest is great if you are investing, if you are using it as a positive thing, but if it's compound interest working against you, or if it's something like this, it is catastrophically terrible. And I do still think that it's going to get worse before it gets better, unfortunately. I obviously don't want to say that, but looking at how the States, how Canada, how Australia, how a lot of these major countries are treating it, Europe's in more of a lockdown because they have it worse, and their neighboring countries like Spain, Italy, Germany are obviously suffering pretty bad, and America's, like New York's the worst. Let's just zoom in at New York here. I think this is New York. We have 114 deaths, and we have 15,777 confirmed cases. U.S. in total has 32,640. You might see your country here. Canada is almost 1,400 here, 1,378. And I currently live in British Columbia, and we currently have 7 deaths. So stay safe. I'm basically staying at home unless I'm getting groceries, and then I'll make sure to bring hand sanitizer and just being aware of what you're touching, being aware of touching your face, or wearing a mask if you're out, if you have one, and not going out if you don't really need to, or if you are kind of going in places that not a lot of people are going to, like going downtown versus going to, for example, a hike in the forest would obviously be a huge benefit compared to going where a lot of people are going. So don't want to dwell on this too much here. The next thing we're going to talk about is, I guess we can talk about China first, and then we'll go on to the U.S. So this is from CNBC. Coronavirus hits China's economy twice as financial contagion spreads across the globe. So the title isn't great, but the key points and kind of the positives that I think that we're seeing out of this is going to be most of the Chinese businesses that have survived the coronavirus outbreak appear to be back at work. Official and third-party figures indicate that resumption of work rate is generally 7%, 70%, or even higher. So that's really great to see that China is getting back on their feet and having more people go back to work and more people employed, businesses starting back up. That's really great to see, because the outlook for Italy and especially China, because of the drastic measures that they've taken, especially China, is kind of how I think the rest of the first world countries will act after they've kind of get into panic mode, because they haven't really taken any precautionary measures beforehand. Like, they're not testing everyone. They should be testing basically everyone, not just people who are coming in and saying they have major symptoms, because it could take a week, 2 weeks, or longer for people to start to really see the symptoms and feel it within themselves in order to actually say, okay, I might be sick, let's go in and get tested. So it's not great. So we can see mainland China has reported 0 new domestically transmitted confirmed coronavirus cases for the last 2 days, bringing some relief to a country that's been fighting the disease since the first emerged in late December in the city of Wuhan. So that's really great news. Now, data indicates that most of the Chinese businesses that survived the outbreak are back to work. Official and third-party figures say that resumption of work rate is generally 7% or even higher. So great to see, and that's the positive note for our news topic of the day. One thing that is negative is talking about America here. With millions of work in unparalleled moment, Trump tells states to hold back unemployment numbers. So I don't exactly know if this is the law, but I'm pretty sure you have to present them. I'll look more into it, but I'm pretty sure you just can't hold them back from people, and they have to show them, right? So it will be very, very interesting to see. And then we see President Donald Trump's Labor Department is asking states not to release hard unemployment numbers, the latest attempt by the White House to downplay the economic and real-world consequences of the coronavirus outbreak. And we can see right here, the investment bank Goldman Sachs is predicting the claims increased by 2.25 million in the last week, a historic and frankly apocalyptic surge, as Wall Street Journal's reporter Michael Derby described it, with no historical parallel in U.S. history. And we'll look at the chart right now, and just a quote and tweet from Michael Derby here. Goldman Sachs warns data points to a historic and frankly apocalyptic surge in unemployment insurance claims from current 281,000 people who are currently having unemployment insurance claims to 2.25 million next week. So this is the chart right here, and it dates all the way back to 1967. And we can see, if you want it, I can send you the link. It's in the Fregat Economic Data. And this houses basically all the economic data for the United States here. And we can see here, in 2008, it went all the way up to, it looks like around 670-ish thousand. We can see probably right there, 650,000. And then what's worse, the worst point out of this entire chart that dates all the way back to 1967 was in 1982. Let's just see if we can get the very top there. Maybe not. Around 700,000 claims made back in September of 1982. And we can see when we zoom in, let's zoom in here. We got a sharp spike up to our current 281,000, which the tweet just mentioned. And then they're thinking that the next week, the weekly here, will be at 2.25 million job claims, which is by far the highest amount in United States history, by far. Not even close to the recent all-time high of 700,000. So when that comes out, we'll see how it goes. The market's obviously going to be freaking crazy as shit. It will, yeah, like when these economic data points come out with job claims, job losses, unemployment, GDP, CPI, actually consumer price index would actually not be terrible, but major economic data points, when they come out, will have a huge impact on the price here of major indexes and stocks and the overall market. So yeah, we will see how it goes, but it's going to be a very volatile time for the next couple of weeks here. Now going on to the charts, let's start off with gold and the commodities, and then we'll move on to the index and the dollar. So, or I guess one index, the SPY. Let's go back to the longer term chart here for gold. So gold's at a really nice level. As we can see, we have a very nice range. Let's get a picture right here. We've got a nice range around the 1550 zone, which is our current level of resistance right around here. As we can see, current level of resistance around 1550, and we have a strong level of support at around 1450, right around here. So we're currently in a range, and we're currently right in the middle of the range, and we just broke out of the squeeze using this 1450 level of support and a descending zone, and we broke out, and we're halfway to the top of the range, which is around the 1550 right around here. So this is 1450 and the top is 1550 and the price moved up, pulled back, and now we're coming back potentially to test this 1550 range. We'll see if we get stuffed by the sellers and come back down to the 1450 level of support. So that's how the smaller time frame looks on the larger time frame. It just looks like we slammed down and we're in consolidation, and it makes a lot more sense when we get to the smaller time frames, but it's just a matter of if we're going to make it back up to the 1550 range to complete the market structure move to the upside, or if we're going to get halted midway around 1500 right here and then come back down to the level of support, and then it's just a matter of if we're going to break or if we're going to kind of double bottom and hold that level. But if we don't even make it back to the level of resistance at 1550, come back up to here after the breakout of this squeeze, I think that it's going to be looking more bearish, because that break to the upside on the smaller time frame didn't even make it to a recent high. And when we get the TA, we can see it very, very clear. We got a squeeze to the downside. Let's get this right here. So we got a squeeze to the downside. This is our descending trend line. 1, 2, 3, 4, 5, 6. A lot of touches at that zone. And then we got a horizontal zone of support. 1, 2, 3, 4. Key zone. We got a nice squeeze. We pushed upside, made a market structure higher high from the previous resistance right there, horizontally speaking. So that is good to see. So market structure per section is both complete. More buy volume and sell volume on the way down. And then now we're testing the previous resistance as a new level of support, also in confluence with our ascending support created with our anchor point from the low here, and it's making higher lows, which is good to see, creating an ascending zone. So it's looking like a good potential area that we're seeing right here for a level of confluence for the buyers. But like I said, we hit the mid-range zone, we got rejected. Now we're coming back down to our support area, and we're going to see if we're able to make that push to the key level of both support and resistance, as we can see around the 1550 range. That's basically the range that we're going to be looking for. If it does break above that zone, then we are going to be breaking to a higher high. Potentially we could be seeing a higher high, higher low. And then if we're able to break above, I don't think we're going to be hitting these highs here. In my personal opinion, we got a mid-range zone around right there. But I am really going to be seeing if this 1550 range is able to hold for a resistance. So that's basically my outlook on gold. Not a whole lot more to talk about there. And then silver is next. Similar price action pattern here. We've been talking about this for a while. Let's squeeze up. Almost made it to the high of 1330-ish. Could not make it. We came back down, but we got a nice confluence zone where we're testing a previous level of resistance right around here as a new level of support. As we can see, level of support, resistance, 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 support, support, level of confluence from the low point right here, which is our anchor. And we see 1, 2, 3, and then this is our fourth test. And then we see a squeeze from our ascending zone and our horizontal zone as a support. And then if we zoom right in here and draw our little squeeze, very nice potential moves. So it's looking a little bit more bullish. That actually should be red. I don't know why I made it green. So looking at that, looks pretty good. Made a move to the upside where it's now closed for the weekend. We will see it open soon here. Oh, and not very soon, but we're going to see it open shortly. I don't exactly know when it's going to open at my time. But at the end of the day, we're going to see it open. And it's just a matter of if we're going to come back down here and test the zone of confluence. Still looking pretty good for a potential long all around this zone here until we get to a potential break of around the $13 or $12.40 range, and that around this confluence zone here. If that breaks, coming back down to the 11.7. If that breaks, we're going to go further down, in my opinion. But as of right now, it's not looking too bad for the longs for silver. But major supply zone that I see is 13.20, and if we break above that, we got this zone on the weekly and daily that's been held since 2015. So that's probably going to be the biggest resistance that you can possibly find on silver right now, with the confluence zone of this descending projection area, as we can see. So right around there, $14 is going to be a major sell area. And if it breaks it, that's just going to be a really key area of a break. And if we're able to hold above that zone, it's going to be looking really bullish, in my opinion. It's actually looking a little bit like a reverse head and shoulders. We didn't make it fully to the breakout potential zone, but we just draw a descending zone with that recent high there. And if we hold this area, we could go a little bit lower, but if we hold this area, that could look like a nice potential reverse head and shoulders, but obviously the market momentum is very much to the downside still. All right, so that is silver. Looking like a good potential here. Major level of supply. Gold and silver are looking kind of in a similar way. Silver was a front runner. It moved up well before gold, but gold did inevitably break the zone, and now silver is looking like it's going to try to attempt to make that second high there, making a higher high than the previous, which means gold would probably be making a higher high as well, maybe testing the 1550 range. So we'll see how it goes next week, but it does look a little bit more bullish on the 1 hour chart for the upcoming earlier parts of the week, and then we'll see how it interacts with around the resistance at 1320 for silver and around 1550 for gold. That's probably going to be the week. It depends on if we're getting a really strong move to the upside or not, but that's basically kind of the outlook that we're going to have for this upcoming week. Quick talk about gold and silver ratio here. We got a pretty big retracement down. This weekly is going to close here. Got a resistance that's now a nice level of support, dating all the way back pre-2007. Very well respected previous resistance, support. So it's going to be another level of resistance here. Once that breaks, I think that we could see a potential stronger move in silver. And then once we see something like this, where we're seeing a very strong move from silver compared to gold in price appreciation, I think around that time Bitcoin will be even greater price appreciation compared to silver and even more compared to gold around that time. So this is kind of why I'm looking at it, and it's just a level that shows me the amount of, I guess, speculation going on within within the safe haven assets in some sense. So I'm going to stick with the weekly here because this is more of a macro view. U.S. oil, we see it did bounce pretty well around the $22 range, but came basically right back to the same zone that it initially bounced off of. A lot of volatility here on crude oil. In a span of 3 days, we're moving like 30% each day. So crazy time for the future traders on crude oil. Or really, if you're just trading, I guess, options in crude oil sector. But really anything involving oil, you are having some crazy volatility. But at the end of the day, I think the daily candle shows this support very, very well. Around 22, I'll take that off. And that's all we really need to see. And then looking at the weekly, why is that key zone? Let's look all the way back here. We can see key level, which is sticking out as a higher low, and then we see 1, 2, and this is our fourth validation, and we got the weekly candle to close. So we can see it's a validated zone. It's not a perfect area because it's a type C, so the price pushed all the way down with the wick protruding below the area, and the candle closure did not close at that zone. Ideally, we would have got a candle closure, so what I'm talking about is if we got, let's just zoom back in, kind of like that, where you see the body of the candle close right at the zone, and I think that could work theoretically. I think I might actually do that, because then it'd be hitting the second wick, and then you get a nice candle closure there. So let's see how that looks on the daily, because before we had it on the daily close, let's just zoom all the way up so we can grab this. We had the previous daily close like this, that closed on the body candle closures, which I was pretty comfortable with, and that's how I initially drew it, like so. And I think I'll leave it at that. I'm pretty happy with it. Although that previous line would be going right here, so let's just quickly see how it'd look if I did that on the 4 hour. Yeah, so that's where it would go right there. So I think both are valid. I'm going to leave it like there because the weekly is a pretty key zone that we're wanting to see candle closures on. But we'll see how it interacts with the zone. Obviously, we're getting a lot of areas where there's going to be buyers, so we want to see how it interacts. Not much more to talk about. I'm going to stick with the daily candle here and see how it interacts with this for this upcoming week. I don't really have too much exposure, nor am I really an active trader in the oil markets, but with this move, with so much happening right now, I think it's important to kind of bring an analysis and keep everyone up to date that wants to be up to date with this, because talking about it is one thing, but actually looking at a chart, looking at the months and months of data is very important because it gives you perspective of where the price is. When you say something drops 60%, you have no understanding of where it was prior, and you have no real perspective of where the price is now. So having a view of the chart is very important. In my idea, anyways. Everyone's different. So next thing is going to be SPX, which is the S&P 500, and then the US dollar index. Let's look at the US dollar index first. This is also another macro chart that we're looking at, not really looking at it any closer than the weekly. I'm just going to get some water here. So we do see it at a current level of resistance. We see on the major monthly chart here, key level of resistance at around 102, 103, right around there. I drew a pretty large rectangular zone. I could minimize it a little bit, I think, just like so. So, you know, the high is around 103, and it's currently sitting at 101. So it's basically right at our level of resistance, and it's just a matter of if we're going to double top here from the high of 2016, or if we're going to break, make a new high, and then continue to trend towards the upside. Now, what's my speculation? Let me get some coffee here. So, what do I think? This bullish candle is absolutely massive. We saw within that 1 month come all the way down and then push the price all the way back up. We don't see the candle closure on the monthly. Let's quickly look at the weekly here. Got the candle closure right at that zone. Just thinking about global macro, thinking about what's happening in the markets, I personally think that the US dollar will break this zone. Could even hit 120. Like, we don't exactly know. This is going to be the next major structural resistance or structural level of support that we're going to see the price potentially hit if we just continue to see the amount of panic, the amount of fear in the market. Because right now, what's everyone doing? They're selling all asset classes because they want to get into US dollar, because it's basically the only thing that's stable. You look at asset classes across the board, you're looking at basically every single stock's down. Unless you're like trading actively, shorting, inverse lever, unless you're actively trading it, you're not able to make money on the long side basically at this point in time. For commodities, obviously, oil, gold, and silver all down. We already discussed those charts in this video. And then crypto is down as well, basically throughout the whole board, looking at alts, which we did a video on earlier today. So basically, bond yields are very, very low, but bond prices skyrocketed. And they kind of went exponential because so many people were driving into bonds because, you know, that is the safest place to park your cash, even if you're getting almost zero interest in your principal. You're making basically no money, but people are so fearful of a recession, of them losing money, that they're willing to basically take zero return to be ensured that they're going to have their money in the future. Even if there is inflation, they don't care. They just want to park their cash somewhere that isn't going to drop in 50%, 20% value like we've seen in the previous recessions and in stock market crashes, where they've gone down 50% and we're currently at 30%. So we'll look at the daily and the weekly chart for the SPX as well. So a little bit of macro in terms of where I think and where I view where we're heading. I think that it's going to continue to get worse, especially with the different economic statistics that are going to be coming out for March and for kind of end of Q1, where we start to see the coronavirus really affect basically every industry you can think of almost in many countries. And that affects that, like, it's like a tree, right? There's branches, and if it's not just one industry gets affected, but when an entire sector of people lose jobs, their spending habits are going to change, and that's an entire sector. So you're thinking, Joe, it's just a sector, but you're like, imagine like the oil in the U.S. and for Canada, Alberta, they don't have work anymore. It doesn't make sense for them to continue production because it costs, let's say, $40 per barrel, $30 per barrel to take that energy out of the ground, and it costs them 40, and it takes, and you get out $20 or $22 a barrel. So it just doesn't make sense, right? For simple, how much it costs versus what you're getting, you're just losing money the continuing of the operation. So it just doesn't make sense to continue operation. And that's just one sector. You're looking at airlines, you're looking at hotels, you are looking at restaurants, bars, clubs, any real entertainment. That's a lot. That's like amusement parks, all this stuff. Like, look at Disneyland closed, and like, that's crazy. Six Flags, all these major I guess, companies that are more or less for entertainment purposes or social purposes or anything regarding that, you can't operate. So I wish everyone the best. It's a challenging time. Yeah, I don't really know what else to say to that. I'm going to go on and continue, but we have a Discord where we're talking about challenges that people are facing, and I think in these times it is really important to understand that it's not the absolute end of the world. People have, humanity has gone well past this, and we suffered worse. And this is not something that's just, something to brush off. It is very significant, but at the end of the day, I do think that, we will recover. I do think it'll get worse, but it has to get worse before it gets better. In order to kind of see a lot of the bad that's been going on in terms of the amount of debt, the kind of buybacks of the stocks, and just bailing out companies because they're not efficiently functioning. Like they're not reserving. Like if you or me doesn't save for a rainy day, I'm not going to get bailed out by the government. You're not going to get bailed out by the government if you're not saving for a rainy day like this. If you spend all your money on a specific thing to make if you're going all out and spending all your money on things to make yourself look rich, but then you have $0 in the bank, your credit cards are maxed out, and you're literally living paycheck to paycheck, this will affect you greatly. Because you have all these expenses. If you don't have any money coming in, you're going to have to sell all these things for a major loss when everyone else is selling at the same time. Increase in supply, for example, used cars and all this. A little bit later down the line, if you are looking for a used car, I think this is a really, really great opportunity for people who are prepared, have cash in the bank, or in other I guess like an actual physical dollar, and then being able to go purchase a car for a very reduced amount. But it just depends on how prepared you are and how prepared you were in that sense. So looking at the macro chart for the S&P, like we said, massive drop to the downside, but we're still kind of holding this consolidation here above the $24-ish $100 level of support. Remember, these zones are going to be areas, not just exact price points. So yes, we are below it, but in my opinion, we're still holding barely at that level of support here. A real low would validate previous below this wick down here, because on the daily chart, we can see it could still bounce here where we're kind of consolidating here. And we'll talk about that. But on the weekly chart and then on the monthly, it's looking very, very bearish. But this is an area, if we're going to bounce, would probably bounce around here, because as we can see, we bounced back in 2018. And then we are currently holding this level. Obviously, the previous week was a very brutal week in the markets. But yeah, we'll see how this upcoming week brings to the table. Looking at the smaller time frame here, this is the hourly. As we can see, this is kind of where we started that fall. And let's just talk about market structure here, because we were holding a horizontal zone. We broke to the downside. We made a lower low, and now we still are consolidating, and we still are potentially creating a pattern, a structural pattern that could break out to the upside. But what we did is key level right here, here, and fake out came right back down, level of resistance. So we're making lower lows and lower highs, obviously. We initially were holding this zone of support, held right here, held right here, held right here, held right here. We made a lower low, and then we held the previous market structure resistance right here, but then we started making these higher lows here, as we can see. So after that lower low, we started making a squeeze where we're making higher lows at the area of support, and we got a strong level of resistance on the way down. We had a squeeze, and the price broke down below the resistance, came back, and retested it multiple times before smashing back down. And we'll talk about that on the 15-minute within this chart. But that's the kind of outlook of what happened, why we had a massive sell-off on the last little bit of Friday, the past few hours there. Morning started off consolidating, and then we just took a massive dump down. And on the 15-minute, we can see right here, got a projection zone, or not a projection zone, a anchor point right here. We don't have a projection on this chart. And we see 1, 2, 3, 4, 5, not really touching, but I still qualify that as a hold. And then we see another hold right there, and another hold right there. And look at how many wicks. We see 1, 2, 3, 4, 5 wicks all the way down. And then you see a no demand candle right here, right there. And then you see a bearish engulfing candle after, engulfing candle with more sell pressure coming in than buy pressure. That was a pretty solid confirmation there for an entry. And we're coming back down here. And then this is a potential level of support that we could see. So they take profits, we're kind of at this low, and then the final zone at the lower low if we're going to get to that zone. And we'll see how it goes. But at the end of the day, I think we could see a bit of a bounce here. So we're going to play it pretty safe. Because of this key level, and as we can see last time, very aggressive bounce that we had back in 2018 before Christmas, massive bearish push down. After Christmas, massive push back up. So we'll see how it goes. We want to be very, very cautious of any major rejections from the bulls, but we're mainly looking for shorts here. I don't think we're going to have a rally back up and see new highs. I definitely do not think so. For a level of resistance, we could see, looking at the hour and 4 hour chart, major level would be around 28. Secondary level would be around 2,700, in my opinion, that we could see. And then we do have a minor level around right here, around 2,600 around, right around there. So we'll see where it bounces. I don't think it's something I want to trade, because you're counter trend trading on something that is massively bearish in terms of the fundamentals, in terms of the technicals. Overall, it just doesn't make sense to me to try to look for longs in this market when my bias, when my overall view is bearish. I just should continue with looking for shorts. So that is the overall analysis for the global macro here, looking at different asset classes. It'll be interesting to see what we have for this upcoming week. I hope you enjoyed it. I hope you got something from what we're able to provide with our YouTube lives here. Like always, thank you for watching. If you have any questions, drop a comment. And until next time, happy trading, everyone.